Hey, what's up guys? In this video, I'm going to show you the simplest and fastest way to get started trading cryptocurrency. I'm going to show you exactly how to set up your account. I'll walk you through funding your account and placing your first trade. Now make sure you don't skip any parts of this video and watch till the end so you don't miss any key points. By the end of this video, you're going to learn some of the most advanced and simple to use tools that thousands of traders are using to be consistently profitable trading cryptocurrency. So let's not waste any time and let's get into it. Okay, so the first thing you're going to need to do is you're going to need to set up your account on an exchange. What this is, it's essentially a marketplace where buyers and sellers come to trade cryptocurrency. There's all kinds of people in this marketplace. Some people are trading every single day. Some people are buying and holding for long term. So you have a very diverse mix of participants that are looking to trade on these platforms. And there are many platforms. We're going to use one that's widely available across the world because I know we have people from all over the world watching these videos. Okay, for this step-by-step tutorial, we're going to be using MEXC Global. So we're going to go to Google and simply type in MEXC.com. And it's going to take you to the trading platform or the marketplace where you can buy and sell crypto. You can just ignore these ads. And now at the top right, you're going to see where it says sign up. So you're going to create an account. We're going to create an account using an email. Now we already have a demo email set up, so we're just going to type that in. And we're going to create a quick password. And we're going to have to accept the terms, so you can go ahead and read that. And you're just going to hit sign up. You're going to have to fill up this little caption. So we see we have to place this in the correct order. So plus this little burger thing and this thing, hit OK. Now my verification has been succeeded. Now it's going to ask me to enter a 6-digit code that I got in my email. So I'm going to go to my email account. And so now that I'm in my inbox, I could see that I have an account verification email. So it's real simple. I'm going to enter these numbers in, 744969. So I go back to the window over here. And now I've registered successfully. Let's give it a moment. So now it's giving you some bonuses as a new member. You can go ahead and read that. I'm not too interested in this, so let's skip that. So we're going to hit look around. All right, so now that we got the account set up, what we are looking at here is the wallet overview. So this is where you can view your funds when you fund your account. You can essentially deposit, withdraw, send, and transfer funds onto your wallet. So this wallet is known as a custodial wallet, meaning that MEXC Global has ultimate control over your wallet, and they assign to you a unique ID or this specific wallet address, so that way you can use their platform and move funds on and off the platform with a specific wallet address. For now, just know that this is a custodial wallet. You do also have another type of wallet, which is called a private wallet, which is strongly recommended as you build your assets and you start trading and accumulating these cryptos that appreciate in value. You want to make sure that they're highly secure and you want to have full control over them by having what's called a cold hardware wallet. Now we'll go more into detail in another video, but for now, just know that there are multiple types of wallets and this is your custodial wallet. Basically what a private wallet is, just to sum it up, it allows you to control your own cryptocurrency so you don't have any counterparty risk. Okay, so now let's move into the next step. So what you want to do is you want to get money onto this account so you can start trading and buying crypto right away. So what we're going to do here is we're going to go up to the top tab where it says buy crypto. The fastest way to do that is to go to where it says quick buy and sell. And on this page, this is where we're going to be able to enter the currency that we're going to be using in exchange for the crypto that we want to receive. So for example, if you live in the United States, you'll be using the US dollar over here. If you live in Australia, you'll be using AUD somewhere over here below. And for example, because I am in Canada, I'll be using the Canadian dollar. And I'm going to put, let's say $500 just for demo purposes. And it's going to show me how much I will receive. It's giving me a quote on the current prices of this specific stablecoin. One common cryptocurrency that you really want to get familiar with is a stablecoin. So we're going to be using USDT or US dollar tether, which is essentially a coin or that is backed one-to-one to the United States dollar. So this is 346 US dollars, also known as US dollar tether. All right. So that's something that you're going to be using on a frequent basis when it comes to trading, especially when you're doing derivatives or futures trading, which is actually very simple. Once you go through this tutorial, you'll fully understand in literally just a few minutes. Okay, so I'm going to get 346 US dollar tether, this cryptocurrency that is backed to the United States dollar. And it's showing me here that I'm going to be going through a third party. Now it's giving me an overview, and over here it's showing me the best price available, which is this third party method. And I'm happy with that. You want to read this disclaimer, go ahead. I'm going to accept. I've done this already. You take your time to read it. It's essentially just giving you all those little disclaimers that you always find everywhere. So I'm not going to go any further into this. So essentially, you're just going to follow the steps and read the instructions. It's very simple. In some cases, it may ask you for identity verification just to ensure that you are who you say you are, because they need to be abiding by the laws, of course. So that's how simple it is. Follow these steps, go through the verification process, and then fund your account. And within between a couple hours, 24 hours, you should have the money on your exchange within that wallet address that we were just looking at. Now you can expect to receive your new crypto in your spot account. You can think of this as your checking account. Now some of you may already have some cryptocurrency held on another exchange, such as Coinbase, NDAX, or Crypto.com, or some other exchange. Now these exchanges do have some limitations. For example, they don't allow you to use leverage or to short the market and make money when the price goes down. Or they may have a very limited selection of cryptocurrency pairs that you can trade. So if you do have some Bitcoin, stable coins, or other cryptos, you can easily transfer and deposit them into your new trading account. Let me quickly show you how you can deposit your crypto into your MEXC account. So the first thing we're going to do is we're going to deposit cryptocurrency into our spot account. So we click over here, deposit. Now on this page, you're going to select the cryptocurrency that you want to deposit. Now I do have some extra crypto laying around on another exchange. So I do have a little bit of Phantom. So I'll show you a live example depositing some Phantom. So I choose the crypto that I wanted. And then over here, you need to select the appropriate network. So the correct network that it's giving me is giving me two options, Ethereum network or the Phantom network. So I'm going to choose the Phantom network because it's a lot cheaper, so you're going to save a lot on fees. So choose the Phantom network. Now over here where it says the deposit address, this is the address where I'm going to be able to send money to. This is how I can receive crypto onto my trading account, the MEXC account. So I click to generate the address. Now I can confirm. And now this is the address that I'm going to send the money to. This way I'll make sure that I'm receiving it. So you can either use the QR code or you can copy and paste. So what I'm going to do is I'm going to copy this address and I'm going to put this information into my exchange. So I'm going to go to the exchange. I have some Phantom right over here. Now it's showing me that I have 901 Phantom available. And what I want to do is I want to send Phantom to that specific trading account, my MEXC account. I'm going to choose a network. It's very important that I select the same network as I had selected on the MEXC. So I choose Phantom. And now the wallet address is the wallet we just generated. So I'm going to paste that into here. Now make sure that this is exactly the same as what you see over here in this account. It's very important or else you won't get the funds into your account. So this is something you need to double check. Now that we're here, so you're going to confirm the amount that you want to send. So we're going to send it all over. And it's showing me the amount in Canadian dollar value. I can add a note here, which is optional. And right now it's showing me the final balance and how much it's going to cost. So there's a 2 Phantom fee. I confirm, and then you're going to send the Phantom over. Now I have an authentication code that I have to confirm on my phone. It's very simple. Follow the process, and then you'll receive the Phantom or whatever cryptocurrency onto your trading account in a matter of minutes to hours. Now that that process is complete, you may have to confirm this via email for some exchanges, so just make sure that you follow the prompts based on the exchange that you're using. Okay, so now I've received the Phantom into my trading account. So if you don't see the crypto that you've deposited recently, all you got to do is go to refresh, and you'll likely see the crypto appear in your spot account. So make sure you're doing that. Now, because we're going to be trading and using leverage in the futures, what we want to do is we want to be able to convert the Phantom into USDT because that's what we'll be using to trade with. So we're going to go to the crypto here in this section. We're going to go where it says trade, hover over it, hit FTM and USDT because that's the trading pair we're trading with. We're going to get rid of our Phantom and we're going to get USDT in exchange. So this is the trading panel. Now I'll cover this in more detail in just a moment. For now, what we want to simply do is learn how to swap Phantom for USDT. So because I have Phantom, I want to sell my Phantom in order to exchange for USDT. So I have the Phantom here. This is the current price, the amount of Phantom. How much do I want to swap? So I'm going to swap the total amount. So I simply click and drag all the way through. So I got 100% of the Phantom I want to sell. And it's showing me the dollar amount that I'm getting in exchange for USDT. So I hit sell. And I simply confirm. And it's that simple. Now I have got rid of my Phantom and now I have USDT. So we can go and verify that into our spot account to see how that looks. Now you can see my phantom is gone and now I have more USDT. So it's as simple as that. Now we're going to be able to go and transfer this USDT from our spot account into our futures trading account. Now we're going to transfer this to our trading account. So we simply click this button over here, hit transfer. Now I'm going to transfer the funds that I have in my spot account and I want to transfer some to my futures account. So I have USDT, so that's the crypto that I'm going to be transferring. The amount, I'm going to click all. So now all of the funds in my spot account are going to be transferred over to my futures account. This way I can start trading. So I hit transfer. I'm showing the transfer successful, so I can go check my futures account. We can see now the money is moved into this account. All right, now we're ready for the fun stuff. Let's go into our trading panel. So the first thing you're going to do is you're going to go up here and hover over futures. Go down where it says perpetual futures. You're going to go to the right and you're going to go right where it says USDT M perpetual futures. So you're going to click that and that's going to take you to the trading panel. Now, this may look overwhelming and complicated, but trust me, using the trading panel is very simple, as you'll see while I go through this with you. However, what is really challenging for most traders is being able to make profitable trades consistently. Many people approach the market with the wrong mindset and game plan, or they don't have a winning strategy at all. And this is what I'm going to help you with by the end of this video, so you can avoid some of the most common beginner mistakes. So first of all, let's look at this chart. This is simply showing us the price of the current crypto we are looking at, and it's showing us the historical price based on time. This information is very valuable for advanced traders who use technical analysis to identify the best and most profitable trades. This is a skill that can take years to develop, but I'll show you a way to be able to trade like the pros in no time. So now let's briefly go over what perpetual futures contracts are and why many traders use them. Let's dive into it. Perpetual futures contracts are trading instruments that track the price of an asset, such as a cryptocurrency, without requiring you to own the actual asset. Now, here's the exciting part. With perpetual futures contracts, you can profit even when the price of the cryptocurrency goes down. This flexibility is one reason why they're so popular among traders. Another valuable tool associated with perpetual futures trading is leverage. Leverage allows you to control larger trades with smaller amounts of money. It can amplify both potential profits and losses. By utilizing leverage, you can increase the size of your trading position, giving you the opportunity to achieve bigger gains from smaller market movements. However, it's crucial to understand that trading with leverage and perpetual futures contracts carries inherent risks. While the potential for higher profits exists, it's equally important to manage your risks effectively. So keep watching as we'll be showing you how to properly place your trades shortly. Now, if I go to the top left right over here, this is the currency pair that I'm currently trading. So I have USDT and I'm trading for BTC or Bitcoin. Now, I can look at all of the available trading pairs over here by simply scrolling down. I can see there are a ton of trading pairs available. Next, let's briefly look at the order book. So the order book for perpetual futures is like a list that shows all the people who want to buy and sell the contract. On one side, you have people who want to buy the contract, and on the other side, you have people who want to sell and make a profit from a price drop. The order book helps us see how many people are willing to buy and sell at different prices. So it's important to know that the market essentially operates as an open auction, and the price is constantly moving based on supply and demand dynamics. For example, more aggressive buyers can move the price up, and more aggressive sellers can move the price down. Now, if you want to enter a position on a trade, you need to place an order. Let's go over two of the most common order types that you'll be using. First is the limit order. With a limit order, you set a specific price to buy or sell a cryptocurrency contract. If the market reaches or goes beyond that price, your order will be executed. On the other hand, a market order is when you buy or sell a cryptocurrency contract at the current market price. It's executed immediately at the best available price. Remember, a limit order lets you choose a specific price, while market orders execute at the current market price. Okay, so now that you understand the two most basic order types, the market order and the limit order, let's go in a little more detail with regards to leverage. So leverage is a tool that allows traders to control larger positions in the market with a smaller amount of money. So leverage enables you to amplify your potential profits and losses. For example, with a 10x leverage, you can trade with 10 times the amount of funds you actually have. This means that if the market moves in your favor, your profits will be multiplied. but if it moves against you, your losses will also be multiplied. So just make sure you keep that in mind when you're setting up your trades. Now let me show you a really handy tool that you can use on this trading platform. It's a futures calculator. So you can actually use this to crunch different trading scenarios based on your risk tolerance. So for example, if we're using 10x leverage over here, I'm going to determine my entry price. So let's assume I want to enter at $2.30. And now let's assume I want to exit the trade at $2.41. Now this is asking me to enter how much USDT do I want to have within this trade. So if I'm using 10x leverage and the available capital that I have is $806, well, the maximum position that I can have is $8,000 with 10x leverage, right? So I'd have to put $806 as margin or as collateral in order to enter that position. So for example, let's just assume I'm going to put the whole amount just for demo purposes. So as you can see here, $8,000 is going to require me to put up $799. Now, obviously you don't want to put up your entire amount when you're trading, but this is just a demo to illustrate how this works. Now I hit calculate, and you can see if the price were to reach my target, I would have $382 in profits, which is essentially a 47% profit. Now, obviously this is just a demo, a random scenario, but you could play around with this based on the trading setups that you've identified. So remember, before you enter a trade, it's extremely important that you have a proper risk management plan, a strategy, and an overall trading plan, which we'll cover in more detail at the end of the video. So I'll give you a quick summary so you know exactly how to get started when it comes to trading. So before we exit this panel, you need to understand the concept of liquidation. So liquidation is an important concept to understand when you're using leverage. This refers to the process where your position is forcibly closed by the exchange when the value of your trading position falls below a certain threshold. This is known as the liquidation price. So when liquidation occurs, you'll lose the funds you had in that position. So it's crucial to use leverage responsibly and manage your risk effectively and protect your trading capital. Now let me show you how you can calculate your liquidation price. So we'll use these parameters as an example. Now I would enter that specific information into this section of the calculator. As you can see, I entered the information right over here, and it's giving me precisely the liquidation price. So if the price reaches $2.08, then that's when I'll lose all the money that I had in that position. So now that you understand some of the basic concepts when it comes to order types, leverage, and margin, it's crucial that you understand risk management and you apply these concepts consistently. So when it comes to crypto trading and trading futures, the art of managing risk goes hand in hand with the science of leveraging returns. As an aspiring trader or a seasoned veteran, it's essential to understand the dynamics of position sizing, risk and reward, leverage, and margin. More than understanding, successful trading relies on strategically applying these concepts. Now let's go over to position sizing, which forms the bedrock of a solid trading strategy. It answers the fundamental questions. How much capital should you commit to a trade? And how much are you willing to risk? This isn't a game of chance. It's a calculated decision based on clear parameters you set before entering any trade. In other words, you need to know the potential gain and the risk you're taking on, a principle known as risk to reward ratio. This ratio is the keystone to successful trading, especially when coupled with a well-tested strategy. An effective strategy provides a predictable outcome over time by clearly stating your win rate. For instance, a strategy that yields 70 wins out of 100 trades translates into a 70% win rate. The larger the sample size, the more reliable the win rate is as a predictive metric. Remember, not every strategy works across all markets or trading instruments. A strategy that works in stock trading might fail in the crypto arena, so keep that in mind. The secret to consistent profitability lies in a strategy that pairs a favorable risk-reward ratio with a good win rate. This combination is your edge in trading. And so I often get this question, do you need large capital to generate significant gains? Well, this is where leverage comes into play. Thanks to crypto exchanges, traders can hold larger positions with a relatively small amount of capital. Essentially, you can maximize your position size based on the risk you're willing to undertake. A general guideline is to risk anywhere between 0.5% to 5% of your account on any given trade, with more frequent traders generally risking less. So in this table, we can see the interplay between risk reward and your win rate. So over here in this scenario, we are assuming that we're risking only $10 per trade with initial trading capital of $1,000. Now, if our win rate was 70%, meaning we're winning 70 out of 100 trades, and our risk to reward ratio is 1 to 3, meaning we're only risking, for example, in this case, $10 in order to earn $30 per trade. So this outcome over 100 trades would be $1,800 because our edge is playing out. We know based on a specific strategy and the math involved that every 100 trades we take, we're going to win 70% of them. So this is an example of having a win rate of 70% with a risk reward ratio of 1 to 3. So let's assume I have another strategy and my strategy wins 50% of the time. So out of 100 trades, I'm only winning 50. And with this specific strategy, my risk reward ratio is 1 to 2. So I'm willing to risk $1 or $10 in order to gain $20. And I know if this plays out over 100 trades, I am going to be profitable of $500. Now let's look at another example. So let's assume that I'm risking $100 per trade and my initial trading capital is $10,000. Again, this is just a hypothetical example. So let's assume that I have a strategy that wins 60% of the time, and my strategy allows me to risk $1 or $100 to earn $200. So if I let the numbers play out over 100 trades, I will be net profitable $7,000. So every time I risk $100, I know I am going to lose 40 of those trades, but I'm going to win 60 of them, and my edge is going to play out over time, and that's how I become profitable. So it's all about understanding the interplay between your win rate and your risk to reward ratio. So again, some strategies will have a lower risk to reward ratio and a lower win rate. Therefore, you're obviously going to be a losing trader. And that's why if you don't know these numbers, you're basically gambling and your strategy is kind of up in the air and you're not going to have predictable outcome or consistent results. Now, let's look at a powerful example here. Picture yourself armed with a strategy that consistently secures a stellar win rate and a desirable risk-reward ratio. Now, let's assume that you have a 60 or 70% win rate and a 1 to 3 risk-reward ratio, and you've been doing this over 100 trades. And now you have these specific concrete statistics at your disposal, which can help you make more predictable decisions. You can predict outcomes, you understand the dynamics, and now you can let your strategy truly shine. Now, what would be the next step would be to increase your position size. And this is where leverage comes in. Leverage is like your ticket to magnifying your position size. And here's the beauty of it. You don't need a whopping $100,000. What really counts is your position size, which is the value of each trade. So when you cleverly apply leverage, you give your win rate and risk reward the room to play out over time. This lets your edge become more pronounced and your strategy more effective. But remember, consistency is key. You got to stick to your strategy and use leverage wisely. And this is how your profits will grow significantly over time. So I just want to share one more scenario here with you because these concepts are extremely important to understand in trading. So I really want to make sure you get this. So here's an example of a decreasing win rate with an increasing risk-reward ratio. So let's look at this real quick. And you can pause this video at any time and you can just break this down slowly at your own pace. But for example, we have scenario A where I have a 1 to 2 risk-reward ratio, but my win rate is 60%. Now, in the next scenario, I have a 1 to 3 risk-reward ratio, meaning it's higher, meaning I'm winning more every time I win a trade, but my risk remains the same. So for example, here, remember, I'm risking $100, let's say, and I'm going to make $200 on this trade if I win the trade. Here I risk 100, but I win 300. And on scenario C, I risk 100, but I'm winning 400 if I win the trade. So this is a more favorable risk to reward ratio, even though in this scenario C, the win rate is much less. It's 40%, right? So I'm actually losing more trades than I'm winning, but the result shows me that I am still a profitable trader, even if I'm losing 60% of my trades, right? I have 60 losses, 40 wins. And I'm still just as profitable as if I were actually a 50-50 trader with a 1 to 3 risk reward ratio, which my result would be $10,000. And here, if I'm winning 60% of my trades, it's a 60% win rate, but a 1 to 2 risk reward ratio, which is still good, I am only 8,000 profits. So this is just to illustrate that trading is not always about winning more, but about managing your risk and reward effectively. So understanding these concepts is critical in your trading journey. So as you let your trading edge play out over time, the numbers will speak for themselves, enabling consistent profitability and significant account growth. The secret recipe, though, is a solid trading plan, understanding of risk-reward dynamics, a well-defined win rate, and disciplined execution. In our private trading community, we bring together experienced traders who share their real-time trading signals. By joining our community, you can immediately trade like a pro, leveraging the collective wisdom of successful traders who have mastered their methods over years of market experience. It's not just about copying trades, it's about learning and growing as a trader, transitioning from hoping for cryptos to moon to strategizing for consistent profits. So let's dig deeper into how you can use leverage effectively in your trading while maintaining your risk parameters. Let me show you how to actually do this. All right, so now we're back on the trading platform and the fun stuff is just about to get started very shortly. So I did tell you you're gonna be trading like a pro by the end of this video, and I'm gonna show you how to set up your trades and how to adjust your parameters. But we can't enter a trade blindly, right? We need to have a strategy. We need to have an analysis based on where we anticipate price is gonna go to from where we enter the trade. So one of the most important tools you're going to have on your trading journey is TradingView. So go to tradingview.com and you can create a free account within minutes. It's super simple to set up. This is where millions of traders are doing their analysis. They're practicing and refining their strategies. This is the charting platform that our community members are using and that I'm using on a daily basis. You get access to lots of market data. So for example, we go to crypto over here, we can get a quick overview of what's going on. You want to create a watch list, click over here. You can add the specific crypto pair that you're looking for. Simply type it in, hit the plus button, and now you'll have your watch list and you'll get a bunch of data. I'm not going to cover too much detail, but basically this is a specific platform that you want to use to create alerts, to make your analysis, and you can go more in detail on the charts. All right, so something that's also really important is actually creating a demo account so you can practice your strategy and you'll find out where you stand really quickly once you create your demo account. You're going to get access to basically like free money and you can practice trading on the live market, but you're not risking anything. So it's definitely not the same when you don't have any money at stake. Your emotions and your psychology is very different because you know you don't really have anything to lose, but it's still a good way to get an idea of how the market works, right? You get an idea of the patterns, you get an idea of your strategy. If you have like a mechanical based strategy where you're just going in based on certain buy and sell signals, then you can really test out some certain strategies. Obviously, this is the one that I'm using. This is the SharkAlgo. So you wouldn't have access to that unless you go to the SharkAlgo website and sign up. Here it's an invite only indicator. But that being said, your chart would be blank. You would click the trading panel over here. So again, I'll show you one more time. So you go down right over here, hit the trading panel. Now this is how you can create a demo account. So it's called paper trading. So you would connect this over here and then now you'd have access to like fake money where you can basically practice your trades, right? So this is strongly recommended if you're completely new to trading. This way you can get an idea of how to use the functions on the trading platforms. So I did say you'd be trading like a pro by the end of this video, and this is one way that you can do that. You can simply copy other professional traders that have years of experience where they've refined their strategy. It's proven, they have a good win rate, a good risk reward ratio. For example, in our Discord community, this is how we stay connected, and we've actually handpicked certain crypto analysts to share signals, to share their trade ideas every single day or whenever they find a profitable trade, and they share it with our community members. So let's look at this specific signal over here. This analyst sent out the signal to short AGLD, meaning he wanted to sell AGLD at the market. So that's the type of order, was the market order. The entry was the specific price. These were the profit targets. So we have 5 different profit targets and we have a stop loss. That is our invalidation point where we want to exit the trade, right? Based on our specific strategy, this is where we want to exit the trade because we need to follow our strategy. And that's how we remain profitable over the long term. The leverage amount being used here is 10x. The leverage mode is cross margin. The position size is 1 to 5% of the account value. So again, this is what this analyst is doing. You could customize this based on your specific needs, right? Based on your preferences. Now, I'm going to show you how to visualize this on your chart. So this way you can actually earn while you learn how to trade, right? So you can actually learn from these analysts. You can see what they're doing. You can earn because you know they have a profitable win rate. And now you can actually go and practice this. So let's go and enter some of the parameters in our TradingView chart so you can see how that works. And you can see he's given updates, right? This was profit 1, target hit 26%, number 2, 43%. And if we just keep going down here, you can see that all the profit targets were hit, 140%. So this is an example of a trade that was sent out to the community members. So we go to TradingView right over here, and this is where we're going to be able to enter our parameters to visualize the trade that the analyst just sent out. Now I'm going to just remove the SharkAlgo indicator here. I'm going to hide that so we can really focus on the trade that the analyst just sent out. Now, I should mention that you don't really need TradingView if you're just interested in copying analysts, and if you just want to take their trades, you can simply enter these parameters into the trading platform like MEXC. Just go enter the entry price, the take profit targets, the stop loss, the leverage mode, and all these parameters. And it's really that simple to copy the analyst trades when they send them out. That's something that you can do. If you're on the go, you can use your mobile device. That's what a lot of our members are doing. But honestly, I do really encourage you to learn how to trade, formulate a strategy. You can use your own strategy, or you can use the SharkAlgo strategy, or you can obviously copy our analysts as well. It's totally up to you. But trading is a valuable skill. It's very empowering when you can make money anytime from anywhere in the world, just on your mobile device or on your laptop. It really is possible once you have an edge in the market. So I just want to inform you that you can simply copy the analyst trades as is. So for example, let's look at this analyst over here, Sherlock. He just sent out some information here, giving some education on a trade setup over here. So again, I won't go into detail, but this is the type of stuff that is being shared on a regular basis. The entry, the stop loss, he's showing his specific setup, his profit targets. You can see updates, the profit targets were hit. So yeah, guys, this is something that's very valuable. You can simply copy these analysts while you're learning to trade. You can basically earn while you learn. But I do want to show you how to visualize these trades, how to set up the parameters, and that way you can learn exactly how to enter it into the system and how you can automate your trades. Once you set your trade up, you can basically forget it, and you can know that everything's going to be executed automatically by the system because you've already entered your parameters. So let's go over that right now. All right, so I took a screenshot of this specific trade right over here just so we can easily see what I'm talking about here. I can just pop it on and off the screen so we can easily refer to it so you can keep up with me. So we are obviously shorting AGLD at the market, thinking the price didn't go down. The signal was sent out at 2 a.m., so we're going to be looking at that. And the entry price is 0.7081, all right? So I'm just going to slide that over here on my other screen. But that's what we're going to be looking at right now. So that's what we're going to visualize. There are multiple ways of doing it. The best way, the easiest way is to use these tools right over here on the left side. So the short position tool, we're going to click that because we're going short. And around 2 a.m., so it would have been right around over here. So this is when it was sent out. And we're going to find the price 0.7081. So we can see here, this is the midline right over here is the entry level, right? And you can see we have it right over here in gray. Now we're going to adjust the parameters. There are two ways of doing this. You can easily just click and drag up to the specific price point. You can see it moves over here. And I can click and drag the profit target. So the green is my profit target because I'm making money if the price goes down because we're shorting. And the red is my stop loss, right? So I'm losing money, I'm in a loss. And this is where I'm going to exit the trade, right, at the stop loss point based on the specific signal. So now I'm going to bring this back on screen so you can see real quick. So we can see here my profit targets. I have 5 different targets, right? When I'm placing my order, I can actually make 5 separate orders, which I can automate so I can exit the trade once the price gets reached. So for example, I can enter the trade, one order is one trade, and I can place this as my profit target. So when the price reaches this level, I automatically exit the trade, it gets executed, and I secure some profits. And I can repeat that for every single profit target for 5 separate orders. Or if I could be more conservative, and maybe I just want to take one trade and I just want to take TP1. So I can customize this. But generally, the most effective way is to follow the analysts the way they execute the trade, because this is part of their proven strategy, right? So this is what I recommend. I recommend you follow their specific method. But for demo purpose, we're just going to look at TP5, all right? We're going to look at the number 5 profit target, and we're going to look at the stop loss. So another way to do this, to adjust it, to visualize this, instead of clicking and dragging, you can simply double click, And now I can adjust my settings based on the parameters, right? So I can look at my entry price right over here. I can type it in, which is 0. This is the one I want actually. So I'm going to leave it as is. But my profit level, I can adjust it based on the profit target. So I'm just going to pop up the image again. So our profit target would be TP5. Let's look at that as an example. So 0.6144. So I simply type that in, 6144, and now I click away and you can see that this adjusted over here. Now my stop loss, I can make the adjustment. My stop loss is going to be based on what the analyst sent out. So stop loss is 0.7759. So we just type that in. And I can just click away on this anywhere, or I can click OK. So now this is the trade setup that the analysts identified. So we can see that this was actually a profitable trade as was announced in the Discord. Now we can see that the risk reward ratio for this specific setup was 1.38, right? And it shows us other details such as the percentage over here, 13.23% movement in price. If it went the other way though, like see initially we actually were in some drawdown where we're a little bit losing, which is very normal, right? It didn't hit our stop loss, so we remained in the trade, and it went in the direction that our analyst anticipated based on his strategy and his analysis. So this was an excellent trade. So that's how you can visualize that. Now those specific parameters, right, that we just entered, we can actually enter them into the exchange now. So this is how we visualize it on the charts, right? So we can keep up with the price action. We can see what's going on. You can use this different tools as well, where you can add indicators. You can use all these drawing tools to essentially help you with your analysis. But this is one really important tool that you're going to use often, so you can basically monitor your risk reward ratio and see if the trade is worth taking or if it fits your criteria. Okay, so now let's go and enter that information into MEXC on our trading platform. So this way we can see how much leverage we can take, what's our position size, like how much margin is required in order to take this trade, and how can we maximize our profits for the specific setup. All right, so we're back in the trading panel, and I want to show you how to execute a trade. I'm going to show you really quickly. I'm going to go over this so that way you feel confident when you set things up. All right, so this is the trade we were just looking at as an example, and we have the chart over here. I just went back in time. I scrolled back so you can see how it looked at 2 a.m. Right now, you're not exactly sure if the price can go up or down, right? A lot of people might think the price is actually going to keep going up because we're looking at the market structure and we're seeing we're making higher highs and higher lows. It looks like it's trending up. But in fact, we saw that the price went down, right? So obviously, there are a lot of people that got in the trade up here and they got trapped in a bad trade. That's why you always got to set a stop loss. But anyways, let's go and enter the parameters of the trade. So for demo purposes, we're actually not going to do a market order because we're actually, we don't want to actually get in the market at this time, right? So for demo purposes, we're going to do a limit order, which means we're choosing the price we want to get in at. So we're going to enter this specific price. So we go 0.7081. So now I'm telling the system this is the price that I want to get in at. All right. And I make sure that I have limit order selected. The quantity means my position size. So I can choose to look at these units based on the cryptocurrency, based on the USDT, the value, or based on the contracts. To keep it simple, guys, just stick to USDT. Hit confirm. Make sure that this is selected. So over here, you're going to select the position size. So based on proper risk management rules, we don't want to go above 5%, right? We don't want to put more than that at risk. And also our analyst is saying 1 to 5%. So that's what we're going to do right over here as an example. Now it's showing us that the position size is going to be $457. So that's how much money we're going to have in the trade, right? If we wanted to full position size, it would be $9,148. So if we were to slide this all the way up, and let's assume that we want to take on 100% of that and place that as collateral, well, then we would have $9,148 in the trade. And if you look down over here, it would require me to put $916 of margin or collateral, right? So that's basically what I'd be putting at risk. And plus the fees. So basically I'm putting up everything at risk with 100%. So as mentioned, we're going to stick with 5%, no more than that. Okay. Now you have what's called a time in force. So you have a few different orders here. So you can choose between the three. Again, we're going to keep it simple. Good till canceled means this order is going to be open. You're going to be asking the exchange, the platform, to execute your trade at this price until you cancel it. So it's going to be open and active until you cancel the order or until the price reaches that level. So we're going to keep it good till canceled. For simplicity's sake, we won't go into too much detail with the other orders. Now, when it comes to choosing the side of the trade, you got to make sure you're choosing the proper side. So we're going short over here, obviously short. So we're making sure we're on that side. If it was a long, if we thought the price was going to go up, then we'd be clicking that. So make sure that this is selected. Now we can see our return on equity based on our profit targets. ROE stands for return on equity. So the take profit trigger price is right over here. We're going to use TP5 as an example. So 0.6144, 0.6144, we just type that in. Now it's showing me that I'll have a return on equity of 132.32%. I can also look at this based on profit. So I can see profit and loss over here. So I would be $60 in profit, which is obviously a very small amount because I'm trading with such a small position size in a small account, right? So $960 is a very small amount. I only have $45 as collateral, but I'm still able to earn $60, right? So now I want to enter my stop loss. So my stop loss is 0.7759. My return on equity would be negative 95%, or my loss would be negative $43.79 USDT. Plus, I also got to consider there are small fees in there. So in order to open this position, I got to still put up $45.83 of USDT. So this factors in the fees and the margin required in order to take this trade, right? So this is my margin required. So technically, this is what I got to put at risk. But based on my levels, my stop loss levels, my profit levels, I stand to gain $60 and I stand to lose basically $43 or $45 basically. So it's pretty straightforward when you look at it in this perspective. If you scroll down over here, you can see it shows your total equity, your available margin, and some of those details. So the difference between cross mode and isolated mode. So basically what cross mode is, cross margin allows your collateral balances to be shared across different positions, whereas an isolated margin is a margin assigned to a single position which cannot be shared across different positions. So basically when you're trading cross mode, you're basically sharing the margin or the collateral across multiple positions. And when you're doing isolated mode, so you can just change to isolated mode, you're basically using leverage on a trade by trade basis. So you're containing your risk based on each and every trade. So personally, I actually like isolated mode better for my specific strategy, my style and setup. But again, there are pros and cons to each. So I'll be making other videos on that. And you can check out our other videos when we discuss different types of risk management and different types of leverage. So I just wanted to do a quick overview. I don't want to get this video too long, but you can choose based on isolated or cross. And guys, when everything makes sense over here, all you got to do is to set up the trade is just open the position. So hit open short. Now it's going to execute all the parameters that I gave to the exchange, right? So I say open short. It's going to give me an overview. So the trading pair, the price, the quantity, 457 is my position size. The leverage, I'm using 10x. My profit targets, my stop loss, my estimated liquidation price. So if the price were to reach this level, I would technically forcibly close. I would lose all the money in my account basically, but that won't happen because I have a stop loss. That's the good thing. That's the benefit of having a stop loss, is I'm not going to risk anything more than basically this amount, right? This is the risk I'm putting. So if I didn't have a stop loss, I would basically have everything at risk, which I do not want to have. So I hit confirm because I know that's what I want to do. Now it said my submission is successful, my order submission is successful. Now I have an open order, meaning that I'm now in the order book, right? This book over here is filled with a bunch of orders at different prices, and the prices go all the way up because this is the sell side and this is the buy side. So I'm in the order book at this point, and when the price reaches that level, let's go to current time now, because obviously it's showing you where it was before. But now currently, right, my order is placed right up here at 70.81. So let's assume, again, just for demo purposes, that there are a lot of sellers up here because we saw price got rejected at that level. And let's assume that price reaches this level and we'll see a supply and demand shift, right? So we'll see supply outweigh demand. We'll see more aggressive selling. My order will get picked up over here. And again, in an ideal scenario, the price would go down from that level. There'd be more aggressive sellers pushing the price down, and my order would get picked up. I would be in the trade, and then from there, the price would go down, ideally, and I would be in profit. And then I'd be in the trade, and my trade would go into the open position, right? I would be open, and I'd be able to track my trade from there, and that open order would be closed, right? It would be zero, because now I'd be how to have my open position. This is what I want to manage. I want to keep an eye on, and that limit order, well, this would be gone because I'd obviously already be in the trade. So this is basically showing you what orders do I have open. Okay, it's pretty straightforward. I can see the details right over here. I can modify the details by clicking this icon. So I can make all these modifications in this section over here. I can adjust the take profit stop losses. That being said, once it's an open position, once it gets filled, once the price reaches that level, then I can go ahead and make more modifications over here. In this section over here, you can adjust things. So it's that simple, guys. You have all these different little parameters. Now you have position history, order history, capital flow. So you guys can go check it out, and obviously you're gonna have to go learn for yourself and experience this. And lastly, again, I just want to cancel this order real quick here because this is not a valid trade. I didn't do enough analysis on this. Obviously, this is not what we just discussed here was hypothetical, right? I can go look on a higher time frame. It could be some other things going on. So obviously, this is not a trade that I want to take. So I'm actually just going to cancel this trade over here. So you can just click revoke. And now I removed my order. The order is canceled. I am no longer in that order book, right? So now my capital is safe. I have nothing at risk. I canceled everything. So one part I want to quickly remind you about is that at any point, based on the leverage you're choosing, based on the mode and the amount, go to your futures calculator, crunch these numbers, use the liquidation price so you can essentially see how much risk that you can manage based on this specific liquidation price, based on the margin required. Right? You click this button, you can crunch the different numbers, and then you can see your target price, your profit and loss. It's very helpful to basically create specific scenarios so you know how much you can risk, and you can kind of predict certain outcomes, and you can see specific price points. So I hope you see that trading crypto and trading leverage is actually very strategic if you do things correctly, right? There's actually a method to this. It's not about gambling. It's about understanding supply and demand dynamics, having a strategy, being able to use indicators, price action methods, right? It's being able to understand the market. You can use fundamental analysis. There's various ways of essentially analyzing the market to get an edge so you can be consistently profitable. It just takes practice, experience, and consistent study. So I really want to share some key points with you. So make sure you stay tuned because these are some must-knows that every trader needs to have. So make sure you watch the rest of this video. All right. And if you do have questions, please leave them in the comments below or join our Discord. I'm happy to respond to all the questions that you may have. Now, guys, it's really important that you have a strategy. So it's great that you can follow analysts, but I also encourage you to understand trading and to develop your technical analysis skills as you go on your trading journey. So that's one thing that you need to understand. So having a trading plan is important. You also need to have clear goals. Whether you're following an analyst or you're taking your own trades with your own strategy, you need to make sure you have specific goals, that your goals are realistic, and that you're actually able to measure and quantify your goals so you can adjust your trading plan as you go on your trading journey. Something else that's really important, guys, is to make sure that you understand your type of strategy. Whether you're following a trend, whether you're scalping, getting in and out of trades very quickly, your trades are lasting a few minutes, or are you more of a swing trader where your trades are going to last a week to a couple of weeks? So there's different types of methodologies. So make sure you understand what type of trader you are. Another key thing you need to understand is you need to have your entry and exit criteria set up before entering a trade. You never want to enter a trade and just guess or gamble and thinking the trade is going to go in one direction. You need to make your trades based on a strategy. It needs to be based on technical analysis or some fundamental factors. So that's very, very important, guys. You can also use a combination of both. So make sure you have that set up and you understand some of these key factors that I'm sharing with you. The most important thing on your trading journey is understanding risk management. Risk management is going to determine if you're going to be a profitable trader over the long term or if you're just going to lose all your money because you're taking risky trades. So some key things regarding risk management is understanding proper position sizing, making sure you have a proper stop loss, and understanding risk to reward ratio. So another key factor when it comes to trading is understanding how to manage a trade once you're in the trade. So you can adjust your stop loss and create what's called a trailing stop loss. So for example, if you're in the trade and price is moving up, you can actually bring your stop loss up, which is called a trailing stop loss. So if the price does move against you, you can lock in profits. This way, you're guaranteeing and securing some profits. Another thing is making sure that you determine the price accordingly based on a proper risk to reward ratio. And the last thing you want to do is be able to adjust your positions if there is some technical factors or fundamental factors that are affecting your trade, because sometimes you need to make decisions quickly, and that's just something you want to keep in mind. Again, you don't want to do this too often unless there's a valid reason. All right, so as you know, we are looking at different methods of analyzing the market as traders, and this is how we get an edge over the long run. So some of the main ways to analyze the market is through technical analysis. So technical analysis involves analyzing historical price and volume data, as well as indicators and patterns to make informed trading decisions. This helps us predict future price movements and uncover potential trading opportunities. Now, some of the key benefits for us as technical analysts is we can identify optimal entry and exit points to maximize our profits. And this helps us with our risk management, so we can set good stop loss orders based on key levels in the market to manage our risk appropriately. This also really helps us with getting better market timing because it provides us with insights into market trends so we can get well-timed trading decisions on a regular basis. And also, this is really important for trading discipline and confidence, because when we're relying on objective data, this helps us instill confidence and promotes discipline as traders. So this is how we can quickly make market assessments so we can assess the conditions and adjust our strategies accordingly based on the market dynamics. So guys, remember that technical analysis is something that's really important. If you want to be successful in the long run, you need to learn some of these key concepts. And I'll show you exactly how I make my trades and my analysis and the strategies that I use on a regular basis in order to be a profitable trader. Now, the next thing you want to consider is fundamental analysis in crypto. So fundamental analysis involves assessing the intrinsic value of a cryptocurrency by examining its underlying factors and the overall market conditions. So some of the key benefits of fundamental analysis involve long-term investment perspectives. So this helps us as investors and longer-term traders evaluate the potential long-term viability and growth prospects of cryptocurrency. So with certain methods that we use, we're able to understand market demand and technological adoption of certain cryptocurrencies. So we can analyze factors like the technology, the team, the partnerships, the community, so we can gauge market demand and adoption potential over time. Something that's really important with cryptocurrency is being able to assess real-world applications. So we can evaluate the practical use cases and utility of a cryptocurrency in various industries and sectors. And this is how we can identify valuable opportunities. We can spot undervalued or overvalued cryptocurrencies based on their fundamentals. And this is another way how we can mitigate risk. We can consider the fundamental factors which can help us reduce investment risk and avoid scams or projects with dubious fundamentals. Now, some of the downsides of fundamentals is that it's limited to short-term predictability. And that's why I like to use technical analysis to make profits on a short-term basis and consistently, because fundamental analysis may not provide accurate short-term price predictions due to market sentiment and the nature of the volatility of cryptocurrencies. Also, some of the data availability and the reliability of some of this data for fundamental analysis can be challenging, especially for newer or less transparent projects. And also, the market may not always fully reflect the fundamental value of cryptocurrency, which can lead to potential timing challenges. And lastly, you need to consider the subjectivity and the interpretation of some of these fundamental factors, because there are different analysts with different skill levels and specialties, and some of the opinions can differ when it comes to looking at some of these cryptocurrencies and these subsectors of the market. So remember, combining fundamental analysis with other analytical approaches, such as technical analysis, can provide the most comprehensive view for making informed decisions in the crypto market. I personally use both, but when it comes to short-term trades, technical analysis is by far the winner. So now that you understand the concepts of having a proper trading plan and understanding the differences in terms of market analysis, it's really important that you have an overview of trading psychology, because when you start trading, you're going to have all sorts of emotions, because the market is basically driven by fear and greed. And you'll notice this once you enter a trade, you're going to have all sorts of emotions. You're going to have a lot of greed, you're going to have anxiety, you're going to have all sorts of emotions. So it's really important that you have a disciplined mindset, you're objective with your strategy, you have patience, and you avoid making impulsive decisions. And this is why having a strategy and strict rules can really help you maintain your discipline. The last thing you want to consider doing is you want to review and evaluate your trading performance over time. The best way to do that is by journaling your trades. You want to take notes on your trades, your strategies, the indicators you're using, and all these other details that are relevant when it comes to trading. The reason why you want to do this is so you can make adjustments and adapt, and you can figure out what's working for you and what's not working for you. I highly encourage you to do this. A lot of traders are going to skip this part, and this is a big mistake. So make sure you do this. Trust me, I have years of experience in the market, and this is something that'll actually really help you over the long term, especially when you're trying to come up with a strategy or you want to optimize your strategy, because the market is always changing and you want to be able to adapt with the market. This is another reason why being a part of a trading community is very valuable, because you have the opportunity to discuss with other traders that are more experienced than you, and they can share their ideas and what's working for them and what's not working for them. So that's why being a part of a community is extremely valuable. Now, if you want to see how I make consistent profits in the market, make sure you watch the next part of this video, because I'm going to show you the exact strategy that I use and the rest of our private community members are using to make massive gains in the market. There are thousands of indicators out there, and some of them are really a waste of your time. You don't want to be using them because they can give you a lot of false signals, and they're not the greatest and they're quite outdated. So what I like to use is I use the Shark algorithm. So it's a premium indicator that you can add on your TradingView charts. I'll show you exactly how to get access to this at the end of the video, but this is the tool that I use. It gives me buy signals and sell signals, and I can incorporate this with my specific strategy. So I like to do day trades and I do swing trades. I have a variety of strategies that I use, and this really helps me with that. So for example, if I go to my settings, I can adjust these specific settings based on my trading preferences. Now, if you want to learn more about this, you can go check out our video that goes in depth with every single feature. So go check that out. And if you have questions, you can always send us a message and we'll be happy to help you out with that. All right, so you can see we're looking at Ethereum right over here, the Ethereum pair. And this is where I do my analysis, right? I don't use this trading platform for the analysis. That's why I use TradingView, because I get the best buy and sell signals when I'm following this specific strategy. So for example, if you can see right over here, this is an oscillator. So it helps me gauge momentum and volatility in the market. Over here, I can see that I'm getting a bullish divergence, right? This is done for me all automatically. And I can see that there's a probability that we're going to have a reversal over here when I see this bullish divergence. And then I get a buy signal, and this is when I would enter a trade. So I would go long, I'd enter the parameters based on this specific signal right over here. I can see the price was over here on this axis, and this is when I'd enter the trade. And you can see, obviously, it was a very, very profitable trade as price moved up, about 13.87%. So if you're using any leverage on this, it would be a very, very profitable trade. So this is one specific strategy that I use. You can see also, this is how it's working on Bitcoin on a 30-minute time frame. So you can adjust your time frames all over here. Again, as I mentioned, guys, you can go check out our other videos where we explain how to use TradingView and how to use the SharkAlgo. So you can see this was an incredible buy signal, and there was another buy signal over here. And this is the overall trend. So it's helping you identify the trend on a long-term basis. And there are other cool tools like this, for example, is the demand zone, where it's showing us automatically where there are a lot of buyers likely to come in to push the price up. And we can see that there's demand zones and supply zones that are plotted for us automatically, guys. Now, once you're on our website, make sure you join our Discord, because this is where you're going to get tons of free information in here. So you're going to get access to a trading guide, a PDF. It's going to show you all sorts of trading patterns that you need to know as a trader. So it's a price action cheat sheet. Let me show you what that looks like in just a second. So once you're in our Discord right over here, you're going to make sure you go to free resources right over here. This is where you're going to get access to our crypto starter apps and dApps. These are some things that you need to know as a trader. And this is to thank you for watching our videos. We appreciate all of our members in the community, the private members, and also the members that are here in our free channel. So this is where you're going to get your trading guide. Simply click on this. So once you've downloaded that, you're going to get access to this trading ebook, where it's going to give you tons of valuable information. You're going to learn some of the candlestick basics. You're going to see all these different candle formations, some of the most common trading patterns that you need to know when it comes to learning technical analysis. So guys, I encourage you to check this out. You can see there's a ton of information on divergences, supply and demand, and so on. So make sure to go check this out. Something else that's totally free is we have a crypto report for our Discord members. So in the Discord channel, make sure you go into the VIP Shark section, go to the model portfolio channel. and you're going to get access to this free report that is for all of our members. It's a crypto report that was conducted by our team of experts that have made huge gains in the crypto market, and they're sharing their assessment with you on the crypto market as a whole so you can understand the opportunities that are available for you, not only for day traders and swing traders, but for long-term investors that are looking to make massive gains for some of these cutting-edge opportunities. So make sure you check this out. It's all in the Discord. All right, so if you guys want to get access, simply go to SharkAlgo.com, click the link in our description, and you'll be able to join the team. I can't wait to see you guys inside. Make sure to like, subscribe if you found this content valuable, and I wish you all the best on your crypto trading journey. Make sure to stick around for all of our other videos because we're going to be sharing tons of valuable content for all of our subscribers. See you next time.